want to use this card to build my credit. Are you going to let me pay it off when I can?
Using your tax return to pay for your bankruptcy is absolutely one of the smartest things to do. Hear me out.
The plan: go into debt to qualify for more debt.
I'm calling for the Toyota Bolon that is posted. Is it still available?
Yeah, the 2020 blue, yes.
Yeah.
Did you want to finance it?
Yes, I want to finance it. Where are you at?
We're on Church Street in Murfreesboro. How about you?
I'm in Nashville.
Okay, so you're about 30 minutes from us.
Yes.
How much money do you have down?
I want to put down like 5 to 6,000. I'm not sure yet. The financing is for how long? 3 years?
It depends on your credit.
So look at what I want to do. I want to use this card to build my credit. My credit score is already good, but I want to increase it for me to be able to get a house here.
She wants to take on a car payment to improve her credit score that's already good, so that she can qualify for a mortgage. That's like gaining weight so you can train for a marathon. Good credit, no urgent need for a car, and we're adding debt.
Yes.
Okay, so are you going to let me pay it off when I can?
Yes, ma'am.
Like maybe after 1 year, will I be able to pay it off?
Yes, you probably want to keep it a little bit longer than a year to get your credit, maybe like a year and a half.
Yes,
you know,
you don't want to leave it for 3 years. No, some people will not let you pay off. They want you to continue paying for 3 years and all that. No.
Well, it's up to you when you want to pay it off. I usually set them up for 3, 4, or 5 years, and you could pay it off whenever you want with no prepayment penalty.
Your credit score isn't the only thing that counts. Income counts, your debt to income ratio matters, savings matter, job stability plays a role, your existing monthly payments factor in. The bank is looking at risk, not just your score.
Okay, sounds good. I like the car, and I hope it's very good. It runs good.
Yeah, it's a Toyota. It's going to get you a lot of mileage. It's a hybrid, blue limited, has leather. Typically that car should go, 300, 350,000. You'll be okay in it.
That's what I want to know. Then I will go ahead and do the online application.
Thank you.
Thank you, Brian. You're going to hear from me soon.
Okay, bye-bye. 6,000 down on a 15, 16,000 dollar Avalon. That should be very, very easy. She wants to get her credit established. We'll make this deal.
I'm hoping to buy a home in the next 2 years. I know I can get approved right now, but I'd rather wait. I'm doing the opposite of her. Saving and investing, not taking on debt. Because when I walk in for a mortgage, I want them to see no debt and discipline.
Calling a customer that has $27,000 negative equity on a BMW. Yeah, this is Zach. You just texted me about your BMW?
Yeah, the car I had before got totaled in an accident, and the insurance paid out what the car was worth.
Okay.
And that brought up the value. So I bought the car for I think 14, got totaled too. 2 cars that were totaled. So the first one broke even, but the second one...
What you're saying is you had one car financed and then that got written off and you put the balance owing onto the BMW.
Yeah.
If you can't clear the balance on the first car, why are we financing another one? Somehow this has just become normal. Just roll it over, bury it in a new loan. The responsible move would be to attack the debt, not move it.
Because I didn't have gap insurance, but nobody told me about gap insurance. I didn't even know it was a thing when I got the BMW. The reason I got the BMW is because that's the only car that the Lend Care would finance me, because for some reason it would hold its value with the negative equity.
So you have
that's why.
A 2017 BMW X3?
Yep.
Or 320i?
320i X-Drive, great shape, no lights, runs amazing.
And you owe $27,000 on it.
Maybe it's different here, but I've never been asked if I want gap insurance. I don't know if it's required, but I've never had someone present it like it's an option. They just tell you you're paying for it. It's just part of the deal. It's in the paperwork. There's no real discussion about it.
Yeah, I think 13, 14 on the BMW. And then I had, I think, a 6,000 or 7,000 negative. I had to put that on top of the BMW. Plus tax, plus gap insurance.
The problem is your car might be worth about maybe $10,000. You would have to try to pay it off as quickly as you can. What you could try to do is you could try to include it in your bankruptcy.
Yes.
He's filing or filed for bankruptcy and still looking at financing another car with the previous debt. That's the stuff that caused the bankruptcy in the first place. If you're filing for bankruptcy and still shopping for payments, that's a pattern. Nothing changed. He got relief on paper, but he's making the same choices.
I can't do that. I think because I bought the car after the bankruptcy.
Negative equity possible, but $17,000. That is too much.
If you were to roll over that, what price of another car would it have to be at? 15,000?
No, it would probably have to be something that's about 25,000 to 35,000 to carry over the negative.
The fact that rolling negative equity again is even being considered is a problem. You're taking a loss and rolling it into the next car. Now you're paying for the old mistake and the new one at the same time. It's exactly how you stay in debt. You have to stop moving the balance and actually reduce it if you want to make any real progress.
Using your tax return to pay for your bankruptcy is absolutely one of the smartest things to do. Hear me out. If you have a lot of debt and you get a tax return and you use your tax return to pay your debts, catch bills up, do all that stuff, which we have done for years. We would catch our utilities up, we would catch our house up, we would catch whatever, if the house is behind, like rent or whatever. We would catch our credit cards up if we were behind. We would catch everything up. We were never getting ahead, but we still had all that debt. And we would go through that vicious cycle of reusing that debt or falling behind again, and the following year doing the same.
Bankruptcy might be necessary, sometimes it is. But if you wipe out the balance and nothing about your spending changes, the debt just grows back. You feel relief for a few months, then something happens. And you're swiping again. That's a cycle. Temporary cleanup, no structural change, repeat.
We don't have to do that anymore. You can use your tax return to pay an attorney to file bankruptcy for you. Chapter 7, if you qualify in the means test. And you never have to use your tax return to catch your bills up again, if you're smart and rebuild correctly. If you get a tax return, now is the time to contact a local to you bankruptcy attorney, get a consultation, see if it's what you want to do, and then if it is, file. You're on the road to rebuilding, on the road to recovery, financially, with a new mindset and a fresh slate.
A lot of people choose bankruptcy after avoiding every other hard decision. But there are other options before you get there. Cutting expenses, picking up extra income, calling lenders and negotiating balances, setting up payment plans, even downsizing your lifestyle if that's what it takes. Most people just don't want to do them.
You know what makes me sad about being in debt is the fact that I make enough money to just go buy whatever I want sometimes. But I can't because I'm paying off debt and I have no money because it's all going towards credit card debt and loan debt. And it's very frustrating for me because it just makes me sad because I give myself a very strict $250 to buy groceries and whatever else that I want / need. And sometimes that's literally just not enough. Like $250 every 2 weeks is just, it's quite simply just not enough, especially in this economy, this joke-ass economy. I literally can't buy anything.
She has a good income, but a good income doesn't mean you're in a good position because it's all tied up in payments. And that's exactly what debt does. It commits your future income to things you've already bought. You're working for things you already have. There's no progress, you're just trying to catch up.
And so it makes me sad because I could literally drop $500 every paycheck on something so easy, but I can't. But I physically make the money to be able to do that, but I don't have the money to do it, if that makes sense, you know? And so it just makes me sad because I'm like, I work so hard and I make a decent amount of money and it doesn't show because past me spent so much of that damn money. So now current me is paying off what I spent past me. So I have to just, I have to reframe and think about it that way of like, okay, well, you did buy all your shit.
Debt is so easy to agree to. You charge it now, you promise to pay it back later. But later costs more, interest, fees, longer payments. You get the item today and you spend the next year or 3 paying it back. Or you can wait, save the money, and when you buy it, you're done.
I want to know your guys' opinions on me taking a second consolidation loan out for my boyfriend's credit card debt.
Ooh, it's not even for you.
It was like 3 bad decisions wrapped up in one. How did we get here?
So I've been with my boyfriend for about 2 years, and when we met, he was making good income. I was making good income. He, I guess, didn't really understand credit cards. I'm a credit card person, and I know you guys hate that term, but I really am. I've never been in debt. I'm the one person that's able to, reap the benefits, not pay the interest.
Okay.
But my boyfriend has taught me now why people are not credit card people.
The Ramsey Show doesn't agree with credit cards. And that's one of the things I disagree with them about. A responsible person can manage a credit card. Not everyone can, but just because you can't right now doesn't mean you can't learn. I see it as a tool. The problem isn't the card, it's the behavior.
Okay.
He didn't really understand, I guess, interest. And the first time around was about a year ago. I was hoping to move in with him, take the next step, but we wouldn't do that. He was about $20,000 in credit card debt. And so I had an offer, 0% interest, 15 months, up to 20 grand. I said, I don't need it. I'll take it.
But it's in your name.
Yes. And it's mostly paid off, actually. The reason why we're here again is because he continued to use credit cards, and I maybe that can be
because
my
we didn't change any of the habits. You bailed him out like a government bailout, and then he went, more please.
I did the same thing in my early 20s. I racked up my cards, took out a consolidation loan, and did it again. I had my cards maxed out again before I even finished paying off the loan. And it cost me not just money, but years where everything I earned went straight towards debt.
Listen, this is a red flag. There's a couple of things that bother me about this. A, that you're on the line and he's not. That's the raging thing.
The
right
risk
in front
is
of
all
us.
on you.
And then you're the one taking out, to George's point, you're the one taking out the loans. Even though he's paying it, the loan is in your name and you're saying, hey, you can do it like this. Yeah, it feels like you're kind of in charge and you're trying to mold him into who you want him to be financially. And he's like, all right, you want me to do this? Okay, I'll do it a little bit. And it's almost like you're being more of a mom to him than a lady friend. You know what I'm saying? Like you're taking care of him, you're helping him to do, and don't get me wrong, there is part of a relationship where you are helping each other and you're teaching each other, but this feels a little bit more
You're going in
extreme.
opposite directions.
Mm-hmm.
And so that's what worries me.
Yeah.
I definitely wouldn't be taking out any loans to consolidate his debt, especially not a second time. He's shown that nothing has changed, and bailing him out won't fix it. You can't rescue someone out of that pattern. If the behavior stays the same, the debt comes back. All you're doing is attaching your name to his problem. If he hasn't fixed it by now, another loan isn't going to do it. He has to deal with it himself. If you want to see more, you know what to do. I'll see you in the next one. Bye.